Hi everybody, Alex Deploy here from Expert Forex, and in today's video I really want to show you an exciting trading setup where you can catch massive moves in the market and do pretty well with your trading. And I'm not only talking about Forex trading, you can trade a number of instruments using this particular approach. As you know, I have a forum where I provide personal, manual and Forex trading robot mentorship to members of the forum. And on your screen, you can see the forum. There's a whole lot of other things that happen in this forum for the members. It is a paid forum. Currently, the membership is $40 a month. It might go up without any notice. There's a lot happening in this forum to justify that. So this is where it's happened. One of my clients did an analysis of this price action and identified a buying opportunity. And I pointed out to him the dangers of this particular trade that he had anticipated. And unfortunately, in the end, he was stopped out. And what I'm going to do is just show you the analysis of what actually happens and how you can read the market, the psychology behind the market, using a simple tool which is a multiple moving average indicators, which you load onto your chart. It's free. Every chart has moving averages. So on this particular one, the shortest moving average is 4, and I just increase it by 4 until it reaches about 32. And there you are. There you have your multiple moving average chart. This is a 4-hour chart. You can apply this to a 1-hour chart or a weekly chart. You will get the same dynamics happening. These multiple moving averages tell you a lot about the psychology of the market. And I'm going to show you a little bit about that. So what happens is there's a particular thing that happens with these multiple moving averages, and I call it the knotting effect. That's when all of these moving averages move together and they become a single color. You can see they're all different, but they become a single color. So where do we see these knotting effects? You can see it over here. You can see my cursor there. All the moving average, except the longer one, is out. And there they came together and all became one. So there was this knotting effect. And the same thing happened yesterday. You had this knotting effect. All of them became one color at a particular point. Now, why is that important? What does that tell you? So what that tells me, and that is why we use multiple moving averages. The short fast moving averages show you the sentiments of the short-term traders in the market. Those are the scalpers and those kind of things. Then the longer term moving averages tell you more about the swing traders approach, the longer term traders who take a longer term view of the market. So that's the psychology behind these moving averages. And if you've never looked at moving averages that way, that's exactly what they show. They show the short term and the long term psychologies of the market. So when you have them all on one chart, it shows you the mass psychology of the market. Now, when the moving averages are clumping together in a knot, what they are saying to you, the market is agreeing that the current price is exactly what it should be. That's the one thing it tells you. The other thing is, there's a huge amount of uncertainty because the short-term traders and the long-term traders are agreeing. Now, that's a very unusual situation for it to happen. So they're agreeing that the price is where it should be. Now, when this happens, the slightest bit of news or movement in the market can topple that agreement into a huge price movement, because it is unnatural for the long-term and short-term traders to agree on a price in the market. So have a look at what happened here. So they all agreed at that point. There was a big knot. Then the market went that way and then broke violently downwards all the way down. Now, why did that happen? It happened because the big players in the market know what's going on. So what they do is and this is called a bull trap. They try and take the market in the wrong direction so they can get better prices on their deals. So they actually create this bull movement, and it's called a bull trap, so that they can buy better prices up there and they can start the market going in the wrong direction. Then when the actual event happens, and you can see it, it's just a massive movement down, then they have made super profits because they've actually sold up there and they can actually buy whenever they want to down here. So it's all caused by that knotting effect that happens over there. Now, yesterday, exactly the same thing happened. Well, here we go, the moving average is all over the show, and then suddenly they started knotting. And lo and behold, again, you had the bull trap happening, the big players in the market taking the market in the wrong direction, and wham, there came the big move, big and fast move. So this is a setup. It's a knot in the market, big players take it in the wrong way, you enter and boom, boom, you go down. Same thing here, knot in the market, big traders take it the wrong way, and boom, boom, it goes the way it was intended to do. So now, what happens here when these knots happen? Then all your technical analysis, all your support and resistance analysis doesn't play a role, because now you're talking about market psychology and big players manipulating the market. So that is why this transaction came to light as a result of one of these mentorship exercises where the trader actually saw this as a buy trade. And it's not a bad, because it's an upside down head and shoulders. You can see there's the shoulder, there's the head, and there's the shoulder. So I expected the thing to break up, and that is why I'm saying technical analysis, when you see knots like that, you should be very careful. There are other factors that start playing a role in the market. So what you do is you either look for the bull or the bear trap, because it can go either way, and you trade the other way, or you straddle that consolidation there. You could, that's quite dangerous, because you could the trade can take both legs. So what happens is, what I do is, when I see a consolidation like that, I immediately put a pending order, a consolidation that is going in one particular direction. I immediately put a pending order over here to catch the movement in the other direction. Same thing here, you see the consolidation, it starts going in the wrong direction, you put your pending order round about there and you catch the move. I hope I've given you something interesting to think about. This is a free trading technique. The indicator is free. All you need to do is catch the psychology of the market and see it reflected in these multiple moving averages. There are hundreds of other signals that you can see in these moving averages, but I'm only highlighting one of them today. So what you see on your screen now is my feedback to the trader as part of the mentorship process that I have gone through. And as a result of that feedback, I thought I might as well make a video showing you the process that we follow in the mentorship and the kind of feedback that I do give in the mentorship. So if you want to join this forum and enjoy the benefits of this forum, there is the link to the forum. A clickable link will be in the description of the video, as well as the comments of the video. Now, I hope you've learned something that you may not have known before. And from me, Alex Deploy, cheerio.